Alrighty, let's talk about Robinhood, a stock we covered on this channel below $10, and now look at this. It's at $25.61. Year to date, the stock is up 101%. It has a market cap of $22.66 billion and a forward PE of 26 times. If you look at what the analysts are expecting, it's quite interesting. So for fiscal 2024, still huge growth, 40% revenue growth and 108% EPS growth. But then in fiscal 2025, revenue is only expected to grow 3.4% and EPS is actually expected to go down by 2.8% to be followed by some growth in 2026. Now, currently the average analyst price target sits 3.8% lower than the price we're at today. If we look at some pricing metrics, forward PE, price to sales, price to free cash flow, well, it doesn't really give us much because there were some quarters where free cash flow was not positive. And this is in the last 12 months. And then price earnings to growth. This is definitely not a cheap stock anymore. Now, the company itself is doing quite well, especially now and in the last couple of quarters. It has done very, very well because of high interest rates. When you have a lot of cash, when you have a lot of money flowing in, you can use that and especially use that very well in high interest rates environment. The company and of course, you as a user, you're getting, I think you got close to 5% APY. So that's quite something. Plus there were some great rewards there as well. If you deposited a certain amount of money, they basically match that. So it's great. I think it's the best app for investing and now for retirement as well. The UX, UI is by far the best that I've seen. And to be honest, if it were available in Europe, I think it would be one of the best apps for finance available. But it's not. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so to start things off, there is going to be the first investor day for Robinhood later this year, December 4th. They say here we'll share more about our vision for the next 10 plus years and how that can drive customer and shareholder value. We also plan to answer questions from investors and analysts. So that's going to be very, very interesting to see the long-term roadmap of the company. Why am I saying this? Because, well, right now, despite all the positive momentum, well, most of the analysts don't see the company growing that much in the next 2 years. And this is why I'm on the fence to say, oh, it's still cheap, it's still a buy. You'll see later in this video. Then we've got the numbers from August. So funded customers at the end of August were 24.3 million. That's up 60,000 from July. July was an incredible month for them and up 1 million year over year. Assets under custody at the end of August were $143.6 billion. That's down 1% from July, but up 60% year over year. Net deposits were $3.3 billion in August, translating to a 27% annualized growth rate relative to July 2024 asset under custody. Over the last 12 months, net deposits were $37.5 billion, translating to an annual growth rate of 42% relative to August 2023 assets under custody. As for margin balances at the end of August, those were $5.5 billion, up 2% quarter over quarter and 57% year over year. Total cash sweeps balances at the end of August were $22.8 billion, up 5% month over month. Apologies, before was also month over month, not quarter over quarter, and up 71% year over year. So as you can see, they're still doing quite well. Now continuing here for the Q2 numbers, this was basically it. Funded customers, gold subscribers, assets under custody, net deposits, all up, all great numbers, right? We can continue here. Total net revenue has increased 40% year over year. Adjusted operating expenses only increased 14% year over year. Adjusted EBITDA is up 99% year over year and 22% sequentially. Net income, of course, we see the inflection point right here. So that's all great. Now, as for revenue growth, the expectations are for it to grow for this year 40%. Free cash flow for this year, 266. Now, in the last 12 months, it's still negative. But for the sake of this video and exercise, we're going to use what's expected for 2024. Of course, that might change. Now, what's interesting here is that in the next 2 fiscal years, Free cash flow here is exploding, right? We go from 266 million to 1.47 billion and 1.69 billion dollars. So that's quite something. Now, how has Robinhood fared in the last couple of years, you might ask? Well, like I said, high interest rates was a blessing for them. That's basically the blue bar right here. The blue bar is net interest revenue. And as you can see, well, that has grown quite quickly. Since December 2020, it's up 479%. Now, with interest rates coming down, of course, that will negatively impact Robinhood. But when interest rates do come down, usually transaction-based revenue go up. Usually there's more market activity, which should benefit them. And still, interest rates will still remain elevated compared to what we were used to before. So don't expect suddenly, this blue bar to crash and disappear. No, it's going to go down gradually. Because as you know, there are still 2 rate cuts expected this year and 4 expected in 2025. Now, a common bearish point that I hear a lot is that, monthly active users has come down and has not really recovered since 2021. While that is true, right? You see this come down, this is the yellow bar. We have seen it recover a little bit, but it's not really stable. Again, Robinhood right now is offering products where you do not have to log in each and every month. So you're not counted as a monthly active user. For example, retirement accounts. Why would you need to log in every month? You do not. Of course, as long-term investors, you would love to see this number increase. Now, what number has increased? Well, net deposits. Net deposits has exploded. Now, it remains to be seen if they can continue to reward incoming clients, incoming users. We can also see that assets under custody, whether it's equities, cryptocurrencies, cash held by users, or option assets, those things have also recovered nicely from the bear market that we've seen back in 2022, especially equities. Crypto has seen a small rebound, but not by much. But cash held by user assets, that has more than doubled since, the lows here in 2022. Now here as well, we can look at the numbers provided from Yahoo Finance for EPS growth rate and stuff like that, the expectations. But if we look at the 24, 25, 26 EPS and revenue estimates, that's all we've got. At least we've got plenty of analysts that are modeling all the way through 2026, but that's about it. There's no 27, 28, 29 as we've used to see with some other companies. And so, right now the average growth rate is just 5% for EPS and 6% for revenue. So definitely not that much. But again, if there would have been more analysts covering this company, more analysts modeling out, 5-6 years ahead, maybe the growth rates would have been different. So keep that in mind when we're looking at this right here, because as we've seen, free cash flow that is not in the trailing 12 months, this is free cash flow for 2024, $266 million. Now, with this terminal growth rate and discount rate, to justify today's price, the implied growth rate has to be 18.8%. Now, as we've seen, for the 2 years that we can look at, sales and EPS is not expected to grow anywhere near that. But we've seen free cash flow is expected to go from 266 million to in the billions, right? $1.6 billion or so. So that's expected to explode, although I would love to see some explanation as to how they got those estimates. So it's definitely not as cheap as many would say it is. Even looking at the current pricing metrics, right? Forward PE and price to sales. Currently forward PE 24.2 times, price to sales 8.5 times. So of course, again, not cheap at all from a price to sales perspective. From a forward PE, still quite respectable. But here as well, we can only look at up to 2026. So the 5% growth rate. And then if we put here a forward PE 33, 28, 20 or 15, the upside that we're getting is just 2% upside if there is a 33 time forward PE based on 79 cents EPS in 2026. If we look at revenue, it's only downside from there. That's the problem when you don't have that many analysts that are modeling out for years and years ahead. So you're getting these types of results. Quite confusing, of course. These are just one of the ways you can look at stocks right now. Of course, we might get way more information the next quarter, then suddenly all of those assumptions will change. Could very well happen. So in this case, looking at this forward PE, price to sales, doesn't really make that much sense. If we look at this, reverse DCF, using free cash flow for the fiscal 2024, it's definitely not the cheapest one out there, but it could be justifiable, 18.8%, especially if the estimates that we've seen, the huge jump from $266 million to $1.6 billion in the next 2 fiscal years, then of course this is justifiable. Look at this. Free cash flow in year 10 is expected to be $1.49 billion. We've just seen that in the next 2 years, that's expected to be that number. Again, I don't know how they got to that. Maybe it's a mistake, maybe not. If somebody knows, let me know down in the comment section below. But overall, Robinhood definitely has momentum with it, especially since the start of August where the stock was under $15. It's still not overbought, but it definitely has a lot of momentum going for it. It's at 52-week high, so that's great. But looking at potential upside, knowing the numbers that we know right now, I think risk reward doesn't make that much sense to me. Of course, next quarter, investor day, they might lay out another plan. Maybe there's some positive news from the expansion into other markets, credit cards, etc., could change the assumptions, could change the growth rates. But the big question mark to me is still that free cash flow estimate. Because if it's true that it's going from 266 to 1 point something billion, then of course, why not? Makes sense to buy it, right? Plus, the markets may be uncertain as to how the company will operate in a lower interest rate environment, earning less net interest revenue. So all of that, of course, will be answered in the coming weeks and quarters. So that's about it for me with regards to Robinhood. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.